Good morning, everybody. Welcome to another episode of the London session on TopstepTV. I will be watching a couple of things today, but probably sticking away from crude oil and RBOB. And the reason for that is because we have the crude oil inventories, and that can be a little bit quiet up to a point where they release the number and then everything kind of goes a bit crazy, and then Wednesdays are just like meh. If you're new here, welcome. My name is Deeyana Angelo, aka Market Stalker D. I'm a Series 3 licensed futures trader, and I specialize in some of the more alternative markets, such as the energies and metals. That trade we did in platinum yesterday was awesome. I didn't take the whole thing because I had to leave the house, but I took a nice big chunk out of it, so that was pretty good. We have something similar maybe developing today. And I see a question in the chat, what time does London actually open? London actually does open at 8 a.m. GMT, which is I think 2 a.m. Chicago time. But I never trade the open. London Open is not like some of the New York Opens that are totally insane and crazy. So before I look for any trades, I'm not one of those traders that sits down and starts clicking buttons. I'm extremely selective over what I am looking for, and I typically look for bigger chunks of the market if there is an opportunity to do so. So you won't really see me do much scalping unless we have like a range-bound day and there's nothing else going on. I will be maybe popping in some trades to grab 20 to 30 ticks here and there. But if we have a potential for a nice day that goes in a particular direction, whether it's, it just keeps going up or keeps going down, or even like a failed auction or something, then yes, I will do that trade, but only if it offers me a certain amount of ticks when I look at the market structure. So that is very, very important. Not to rush things, but like I said, to look for understanding over just clicking trades. All right, so I am looking for, so I see that Tessinix says, what is your bias for gold? Again, I don't really come into any day with a particular bias. I put out the levels and see where we are and how the price is behaving there, where we're opening in relation to the previous day distribution curve, which is the value area that we talk about all the time on the main broadcast. So how far away are we? Is it nearby? Are we accepting it? Are we rejecting it? That is something that I refer to as the open sentiment. Now, gold today is opening with quite a big-ish gap up. It's not totally horrendous, so it is within the statistical probability that we do go down and test the value area high, which is located at 2684.1. So let's just put that on the chart for visual reference. I'm going to probably do it on this chart. So it is a 5-minute chart on here and a daily chart over here. So 84.1. I do need to grab it though. There we go. I'm going to put this in purple because I like to delineate my value areas in purple. Just makes things, and to clarify, this is the London value high. Obviously there is another session, there's COMEX, and that carries its own regular trading hours value area as well. So as you can see, we're pretty far out from that. And to note down the initial balance, 97.5, 97.5, Okay, I'm gonna put that in yellow just to make it, no, actually let's put it in white just to make it super different from the rest. And I know we're going to get a question, what is the initial balance? When does it start? What is happening? Initial balance is the high and the low of the first hour of trading. That's an area where some institutional traders usually get involved, and they're the ones with the big pockets, so we have to make sure we're aware of that. Now, initial balance high is at 7027. Just going to put that on the chart as well. Let me do the coordinates here. It's going to be easier. So a couple of things that I'm looking for in gold would be how we are behaving around these daily supplies. I always look at the daily chart every single day, right? I never start my day by staring at like, you know, a 30-second chart and thinking that I'm going to get any sort of an understanding of what they want to do. Very low time frames are always problematic because you are kind of trading with blinkers on, right? You have a very, very small idea of what is happening. And this is why some people don't really see what's going on the large time frames. They can give you a lot of information. So I have some levels up around, well, between 07 and 720 on gold, where I want to see how the price will behave. And if we manage to run into some resistance, then I will want to look for shorts there. I wouldn't be looking for more longs, because every time you open up with the big-ish gap up, on a lot of the days, it's not that conducive to just kind of a singular upside move without any problems and serious pullbacks. So even in a trending market, you can still lose money because it's actually one of the more difficult ways to limit risk. So you need some sort of a structure. Now, something like an overnight VWAP can provide you with more reference areas, but we don't actually have that. Like the overnight VWAP is actually all the way down at 695. And if that does get tested, we're then looking at a neutral day type, and that would still be a long there. However, at these areas, like I said, once we hit 718 and all the way up to a little bit higher, 720, I want to see whether there are any sellers there. So that would be my first hypo, to look for sellers a little bit higher up. If that doesn't happen, then I will default back to the neutral day type for the London session, and I will be looking for a long at the swing extreme. Purely because then we would have a good sell-off, and we would have had enough space in order to run longs. And that would be more of an urgency trade. If you ever watch Coach Paul and Coach Jay for At the Buzzer, that is what they talk about. It will be one of the trending setups where you're actually in a trend, then you go back down to a relevant high volume area, and yeah, so that's the first couple of hypos that I have for today. I always look at market generated information to see how the market will actually behave, and if another hypothesis arises throughout the session, I will put it in. But I don't like saying to slightly less experienced traders, yeah, just change your plan on the fly, because that leads to overtrading, impulsive trading decisions, because we see things, we want to see stuff, right? And you are very biased when you're in a trade, which you must work on minimizing. It's not a good thing to be a biased trader. So if you can completely stay objective, that is the true secret to good trading. To not wear the glasses of your P&L and your wishful thinking and desire for the trade to work, but just to kind of go, okay, what is happening right now? Is this still valid? Is there a release coming up? Can we actually hold the trade through it? Is it a big release? All of this goes through my head. But when I was a newer trader some 18 years ago, obviously that was a very difficult experience. And, I used to write things out, and that always helps. So if you are in a trade and, for example, the market is turning around against you, I like to scan through different time frames to see whether we're breaking any relevant levels. I do have some EMAs on the chart as well. So for example, if I see that I'm turning around on a lower time frame and the price is dipping below the 9 EMA and is actually printing an opposite candle away from this ribbon that I have, that would be my sign to bail, especially if we're in and around the close of a slightly larger time frame. Like, let's say we're coming into the last 15 minutes, last couple of minutes of the 15-minute candle, and that starts happening. That is a more dangerous reversal than if it were to happen intra-candle. As always, slightly larger time frames offer more trading information. So anything that becomes visible from those slightly larger time frames, 15 and 30-minute chart intraday, that actually becomes a pretty significant reversal. And generally, if you're trading against that, it would be a sign to start bailing, right? So, those are just some of the things and exercises that you can start using in your own trading, just systematizing your early exits. So if everything is fine, if things are just moving like platinum was moving down yesterday for me, there's nothing to do, right? So you just stay on a 30-minute chart until any sort of a sentiment changes. And then if it starts to go back the other way, it starts to take out the high of the previous 30-minute candle, then you're like, oh, okay, is this not a trend? I'm not sure. But if that's not happening, you need to breathe, do some breathing exercises, chill out, go do something else, walk around, come back. And that is the only way to stay in some of the trending moves for much, much longer. Otherwise, if you're staring at very low time frames, you will find a way to exit and get yourself out of a trade. So obviously that's a huge skill to have. It means you have to really control what your mind is doing and what your actions will be to try and minimize the emotional involvement in any trade that you find yourself in. And same thing for entering trades, right? It's the exact same thing. You want to stay objective, not wishful thinking, not going, oh, I have a line here, I'm going to go in. You need evidence that somebody else with deeper pockets is actually looking at that same area, right? One thing that we were doing when the house account started last year was people were calling out like 1,000 levels, and then everybody was like, oh, we're just going to go in. It's like, hold up, guys. It's like we don't have evidence that anybody else is going in here. We need market makers. We need institutions. We need somebody to get involved here so that we can actually run our trade, right? Without that, it's literally just clicking buttons, and that's not a good systematized approach. It's gambling, and we don't want to do that. I'm glad that we've moved away from that. So, we are learning, obviously. All right, let's have a look at a couple more questions. Do you have time to explain one of my VWAPs? Well, the VWAP that I prefer to use, especially for the London session, is the overnight VWAP. I do have the VWAP. It's purple line, this purple trending line here. This one. Actually, let's make it a little bit bigger. So this one here. The ribbon is there not for the 30-minute chart. The ribbon is there when I fall down to a very low time frame to look for either reactions or, I do have bookmap on the other side, but I want to stay focused on TSX, on Topstep whilst I'm doing these streams here. So, putting a whole bunch of stuff on the screen that a lot of people are not even sure how to use when it comes to a wider trading community, it's not the best way to explain things. And also Bookmap requires a lot of screen time to actually start making sense of it all. But the ribbon actually has a very straightforward use to it. Whenever the market crosses over it and then starts to go into the same direction away from the ribbon, that's some kind of a change in sentiment and can be very, very dangerous if you're in a trade to the opposite side. So I use it to explain things better to various people. And it's kind of like think of it as a timing tool, right? So you have the setup, you have the level, and then you have to have the entry. So when do you enter? The big old question. And that's why something like a timing tool, like a 9 EMA, even like just a singular 9 EMA on a lower time frame can be of use. So as long as we're above it, there is no changing sentiment. If it dips below 9 EMA, that's like our first sign to be like, what's going on? Second sign for me would be that we are hanging outside of it to the opposite side. So it's like, okay, something's changed. Whether that's sustained or not, like I said, it depends where you are in the time frame, because some of the algorithms, actually most of the algorithms will have some sort of a schedule to them, like a time-based schedule. And you see that towards the end of the day when we have the MOC orders, and also we have some activity always happening every 30 minutes. So at a 30-minute cycle, they have these algorithms that either close the positions or initiate new ones. And it's just how algorithms work. You have to give them some sort of a time frame to work from and when to close the orders, right? And it seems like for many years, I noticed that there was something going on the 30-minute chart, but at the time I didn't quite have enough knowledge. I didn't work with enough people from that industry, from the financial industry. And then over time, I actually met a whole bunch of people who worked for banks who ended up being a part of my current company, Blatek and Market Stalkers. And then I saw how they were writing some of the code and why things were happening at certain times of the day, and I'm like, oh, okay, that makes sense. And it just became a lot easier to understand why things happen and why those 30-minute candles are pretty important as the final decision makers. I'm not saying you have to always trade from a 30-minute, but have it somewhere. Have it somewhere in one of your screens, whatever you're watching. Like you can watch very low time frames. It can be 100-tick chart, 30-second chart, 50, but just have that 30 minutes in your view somewhere on your other screen so that you don't get super biased and zoned into like really small time frames, because that's when mistakes happen, and that's how overtrading happens as well. People do paper cuts around the same level and they call it the same strategy. It's like, well, no, if a strategy calls for one trade at one level on a slightly bigger stop rather than a 5-tick or a 10-tick stop that you want to use to limit risk, but that's false economy. And then you're messing around with the stop sizes, you're messing around with the number of trades that you're supposed to be trying around that level. And, that's all changing the strategy. If strategy says short at 720 with a 50-tick stop, and then you go, I'm going to try a 15-tick stop. You're being cute. And you're like, okay, so that loses because it didn't give it enough room. And then you're like, I'll try another one. And then you're 5 trades deep. All of them are losses. And then finally you get the reversal, but you're out of money on the day. And you're like, the strategy doesn't work. And the strategy is fine. It's just you've messed around with it so much that you've totally killed your daily loss limit or maximum loss limit. So, be careful. The devil is in the detail when it comes to the strategy design. And most people are just so kind of relaxed and not really thinking about things like position size as well. I was actually having discussion with someone yesterday. We're kind of discussing the plan for 2025, and the trader was like, well, I was a bit sizing up in December and, lost some XFAs. And I was like, well, yeah, you can't size up. You have to have a default position size that you're working with. You can go under it, but you can't go over it. You certainly can't double up from 3 micros up to 6, because that's not your default position size. If your default position size is 3, you can trade 2, you can trade 1, but you cannot go over 3. And in fact, in every prop company that I worked with, we had very, very tight position limits, to the point that they would lock it up on the other side and you can't go over it. So no matter, you have a choice. Let's say you have maximum position 5. You can have 5 different lots, 1 lot of each product. So you can trade gold, you can trade RBOB, you can trade platinum, you can trade, 2 others, ES and Q, but all of them have to be 1 lot in order to come under the 5 max lot position size. Then you also had the potential to run 1 trade on 5 lots. But then the system will prevent you from entering any others. If you see any opportunities elsewhere, you actually have to cut the original position before you re-enter. But obviously these days we have quite a lot of flexibility, and they've given us 10-to-1 now on micros versus minis in the XFAs and in the live accounts. But what you don't realize is that in the live account, you can actually call up the risk team and say, hey, can you limit me to this size? So that's another very positive thing that you don't have in the XFA. In the XFA, it's all like, well, you have a bit of a scaling plan, and that's fine. But once you're over the minimum drawdown, you can do whatever you like. Is that really a good thing? Considering, the median average of people losing XFAs in 2 days, it's not a good thing, so people complain, oh, why can't we trade? But I actually like the risk restraints because I've seen how wrong it can go. And it's one of those interesting things where people come to this business with dollars in their eyes rather than the downside risk in mind. So yeah, just some things to ponder in 2025 in January. I have another question from, I'll name this account later. How would I describe my trading style? Am I a momentum trader? No. So I don't, if you put a gun to my head, what sort of trader are you? I would say I'm a mean reversion trader. That's where I'm most comfortable, to look for a good extension up to some sort of problematic levels and then to snipe it back the other way. Now, there are some days when you're not supposed to be doing that. For example, if we extend the initial balance to one side, like we did platinum yesterday, and it just keeps going. Fading that in platinum that doesn't really have many B-shaped reversals intraday is actually not a good choice. So therefore, over there in platinum, I'm more of a trend trader. I wouldn't even say momentum trader, because that's not, I don't chase breakouts, okay? I will go into a position that has a potential to turn into some sort of a trending move, but it's not going to be a break of a high or a low. If you try to do that in crude oil, to be a momentum trader in crude oil, you will get absolutely slaughtered, because crude oil loves doing these stop runs that look like they've smashed through a relevant level, and then you get a 50 to 70 tick reversal right back down to where it started. So, coming from a product that back in the day had 400 to 500 ticks in a day as a range, whereas now we have barely 100, right? It's gotten a little bit better in January. Whether that continues, I don't know. But for now, we're still under that sort of 180, 200 tick per session that I want to see. NYMEX session is still sitting at 142. So I need to see, I'm going to review in 3 months' time whether crude oil has actually maintained its range. And if it hasn't, I'm not touching that thing with a barge pole, because it's too unreliable to run any good trades from it. But yeah, when it comes to the style of trading, I will, after 18 years, you get to a point where you've seen most market states. So I have strategies for a trending day, but not really a momentum. I don't go for a few ticks on a break of a level. Quite the opposite. If there's a break of a level, I will wait and see whether we are sustaining above that level or not. Like, for example, I have a platinum idea that we might be going into a reversion trade from the yesterday's fall. I want this 30-minute candle to stick up from 950, so we need to maintain the price above 950 without any selling wicks. Right now we're getting a selling wick, and we have 4 minutes until the 30-minute candle closes. That's not good enough, okay? I want to see an unequivocal sustained price activity above the initial balance. And the initial balance did get smashed. Initial balance high is 948.3. So I'm going to mark that here. There it is. So we are above it. I just have another level in mind, which is 950, because again, platinum likes, sorry, it's IB high, not IB low. Because platinum likes round numbers, so if it cannot sustain above a good round number like 950, that means it's just like a fake out day. And then if we end up in a range bound day, I have a strategy for that too. So I wouldn't classify myself as, oh, am I a momentum trader? Am I this? Am I that? Am I that? I am whatever the market gives me on that day. Obviously, that didn't come easy. That took a lot of hard work. It took a lot of journaling. It took a lot of trial and error, and just making sure that I'm controlling myself and that I do have enough understanding about the day before I enter a position. And it did help somewhat that I came from a swing trading background. But in general, it's one of those things where you have to take each strategy one at a time and spend a considerable amount honing it, honing your entries, honing your, your stops. Where do you place your stops? Which stops work the best at what level? How does that particular instrument behave? And anytime I take on a new instrument, and maybe I haven't traded all that much, I will actually spend like 2 to 3 months in a combine. That is what I use combines for, to hone a strategy, see whether there's any quirks to it, and whether the instrument is tradable in the way I think is tradable. So, for example, crude oil for me last year, very difficult, because my system, however I'm entering, whether it's a trending day, ranging day, whatever, I need movement after something happens, right? So once I have the trigger entry, I need it to move about 50, 60 ticks away from that. If I enter a trade and I look at it after 45 minutes and we've moved 5 ticks, that is the thing that doesn't work for me, okay? It might work for bond traders because they, size up a lot, and then they also have these like market neutral strategies that they can run with like hedging activities and stuff. But that's not the kind of trader I am. You get me into a bond trade, and unless there's like a monetary monetary policy, monetary police, yeah, that's a thing, isn't it? Monetary policy, then it's going to be very quiet, and you're going to be looking at like 3 to 5 ticks profit, which means that you can make money if you size up like a lunatic, and you do go up to like 150, 200, 300 lots. And those markets are very, very thick as well. So, very slow, very thick. But that can go very wrong once the monetary policies start changing and they talk about it. Suddenly everything starts kicking around like crazy. And this is where you see blow-ups of, bond traders and positions that they're having, because it's such large numbers because of the nature of the product. But for me, I need that momentum. I need movement, right? I'm not a momentum trader, but when I do a failed auction, I want that failed auction to have follow through. If it doesn't, that's my mental trigger. I'm going to be annoyed that we haven't moved. I remember doing one gold trade when gold was in a bit of a quieter period. I think it was like April or No, it was probably during the summertime. I stayed in the trade for 90 minutes waiting for a continuation of the move. It didn't do anything for 90 minutes, but 2.5 hours later, it finally moved. And I would have gotten my target if I had held it for 3 hours. It's like, I'm not going to sit in a trade that's doing nothing for 3 hours. I have my limits, right? And this is why, I'm pretty careful in what I'm going to trade. And I want to make sure that the volatility of that product is matching up on the day. But like I said, gun to the head, what sort of a trader are you? I'm most comfortable doing mean reversion trades. I'm a contrarian by nature. But somebody tells me you can't do that, I will go do that. And that's been my entire life, right? When I was a very small child, when I was 4 years old, I announced to my whole family that I'm going to be a musician. Not just a singer or, pianist or something. No, I'm going to be a musician. And everybody laughed at me and they went, yes, of course you are. By the time that I was 12, I was already playing 2 instruments. And at 12 years of age, I went behind my dad's back to negotiate my album with strange men across the town, completely different area of the city. And he was mortified because I went into the studio filled with a bunch of adult men that, music industry, particularly in 1992, it was probably a little bit dodgy. And naturally, he wasn't happy about it. He was like, "What are you doing, child?" But, I was like, I want to negotiate my album. So I was always a very driven person. And everything that I've done, I've done because it's my life and, whatever. But I am a big contrarian, and that definitely reflects in my trading as well. Whenever there's a trending move, I'm always fighting myself not to do the trade in the opposite direction. But experience has taught me that if we have a trending day that's left some single prints behind, it's actually a bad idea to go into an opposing move until time has passed. So you have to have a good consolidation on a pretty decent time frame intraday, usually 15 or 30 minutes, and then maybe if they slowly start to reverse it and it all comes back into the standard deviation curves, and I'm like, okay, well, now we can go. But until such time, just going either catching a falling knife or trying to pick tops, that just doesn't work. If you're going to pick a top, try to find a distribution or something, some sort of a price agreement, and then look for the market shift, look for the price to reverse back the other way. This is why the ribbons are pretty good in that respect. All right, so that platinum trade did not do what I wanted it to do. So, platinum trade, I wasn't even in it. But yeah, I was looking for a confident hold above 950. We have a big selling wick on a 30-minute chart. That's not confident at all. But this gold idea that I had, that's shaping up to be a little bit more interesting to me. So I still need to make sure that the 30-minute chart has some sort of a down movement as well, because if I drop down to a 30-minute, you will see that it's still pretty, pretty green or white on this chart. So yeah, it's still very much an upside move. I want to see that we stop making higher highs. So this next half hour, I don't want to make a higher high. I might front run a trade with a very, very small micro. And then if we get a committed move that I want, I can go in with a slightly bigger size, and thereby limiting some of my risk. But for now, it's interesting. They're starting to sort of lose momentum a little bit, as you can see on a 2-minute chart here. However, for now, they still haven't dipped below the ribbon and maintained one of the candles below there. So we're still in observation mode. There is no trades to be had. Like I said, I'm not chasing longs here because that's not the kind of trader I am. And, if you are, that's absolutely fine. For me, it's a matter of choice and experience. and what I'm looking for. I want to make sure that if I enter a trade, that it's worth my time. I don't want to, grab like 10 ticks and it's like, oh, great. And then, spend 2 hours finding a trade only to grab 10 ticks. That's not what I look for. I look for, at least 50. 50 would be fine, but up to about 150 is really what I would call, okay, that was worth my time. Let's have a look at more questions. Tessanix says, is there better times to trade gold and oil? Yeah, of course. The main trading session, right? COMEX and NYMEX, that's where they usually have the brunt of the crux of the whole daily range. Even if you have a daily range of like 200s, but London usually only comprises 80 ticks out of that. Obviously, that's going to be a watching paint dry. That's why this is a perfect opportunity for me to say, if everybody who watches this show goes and upvotes the Eurex posts, please vote for Eurex on this link that I just posted to get DAX into Topstep. We still only have, well, actually, there's 2 companies now. One is the one that shall not be spoken of. They have DAX, right? And the other one is a new one. They also have DAX. So, I don't really see why we can't get some version of DAX in in Topstep. And I've been, it's been over 10 months now that I've been begging to get DAX, because it's, DAX, that's its main session is London, and that's where you get most amount of movement. If we look at what range DAX has today, it's actually already almost up to 100 ticks. It's not the biggest day today. We had a big release yesterday, and we still have a very nice move above the 450. Didn't somebody ask about DAX? But yeah, there's definitely a better time for gold and crude oil, and that's during its regular trading sessions. Okay, so TrapTrack says, so size does matter. Yes, definitely does. Yeah, size does matter indeed. You have to be very consistent with size, otherwise you will get in trouble. You have to trade within your own limits. And then Zach House has a nice comeback. That's very funny, actually. Okay. Edward Stanworth rightfully says, there are plenty of red herrings in prop firm accounts to make people trade recklessly. The biggest one, the buying power on your account. Yeah, and if you don't realize that, yes, you will be, in a spinning cycle of getting and losing XFAs. Like back in the old days, when I first got funded with Topstep in like whatever it was, 2015, it was a long time ago. I don't know whether you know this, but I was their first female funded trader. So they did interviews with me back in the day. That's how I know Eddie and Hogue from. It's been like they used to have this squawk radio, and there was no like video. It was just audio. And they did an interview with me, and then quite a few times I was on there, just like on the fly, just talking trades and nonsense and jokes and stuff. And then when they obviously decided to run since then we've had a relationship, obviously, so we've all become very good friends. And then when they started the YouTube, the TopstepTV, they were like, hey, you wanna be a part of that? And I was like, oh god. And I was still pretty sick from my chronic illness, so I wasn't sure I was able to handle it. Luckily, in and around that time, 3 months before, I actually did this protocol that got me out of the worst of it. So I was like, let's try it. I don't know whether I'm gonna hold on, but let's give it a go, see how it goes. And it was great because it was kind of like having the squawk radio again with Eddie and Hogue, and and then MP was back in the day he was called Nebraska. That was his username, so we all called him Nebraska. And then he was like, yeah, I'm gonna jump and trade. So that was a pretty cool development. But yeah, if you don't know about the fact that the risk limits or, the big position sizes that they allow, that's not what your position size should be. It's just one of those things where, you're meant to have enough common sense to not risk, 50% of your maximum drawdown on the first day. And that comes with position size limits. So many people yap on about how, oh, Ninja Trader, why do you have a scaling plan? Why do you have a scaling plan? And I guarantee you that if you're a Ninja Trader, you can have more people that are not blowing up accounts simply because the scaling plan doesn't allow it. Until you're over a certain amount, you're still bound by the old rules. And for me, that's actually better. However, the community speaks. And you guys, remove the data loss limit. Oh, let's get bigger, 10-to-1 position sizes. There you go. Hang yourself with it, And people do, in fact. They definitely hang themselves with it. But, they are working on getting the position limits in the XFAs this year. That's on the cards. It's going to come very soon. You know how you have trade limits in the simulation accounts? We don't have those here. You can, like all the risk systems that you guys have on the XFAs, none of that is available on, the only thing that's available is like risk per trade. That's it. We don't have analytics. If you want to change your position size max, you have to call up the risk team and go, hey, Mick or Ben or Brett, can you increase my position size? And they'll go, no, thereby protecting you from yourself, right? Now, obviously, for some people, if they ask for an increase in size and you've been trading really consistently, you've not been trading like a lunatic, they will go, yeah, sure. Like if you behave yourself, they'd be more than happy to accommodate you. But if you're just gung-ho doing 50 trades one day on 15 lots, and then you get scared and then next day you're on one micro doing one trade, that's hugely inconsistent. Obviously, it's an extreme example, but you have people who trade 5 lots one day and then the next day they're like, oh, 5 micros. There's no, unless you've had... unless you dug a massive hole for yourself on the previous day, I'm talking like 20, 30 grand or something, there is no need to have that big of a change in position size. So the only reason to do that is fear. Like, it's not strategy. It has nothing to do with strategy. It has to do with fear, which means that the trader is not trading from a plan and they don't even know what their position size should be. So it's like just gung-ho, oh, today I'll do 5, tomorrow I'll do 1. Then if it doesn't go well, I'll go down to a micro. It's like, yeah, go smoke another one, bro, All right. Pay to Farm Crypto Journey says, did you see any setups for the end of the day in New York session yesterday on CL on GC? I will be honest, I actually finished my day pretty early yesterday. I did that platinum trade. I had a DAX trade that I was running. I think it was pre-PMI, and then I just closed it. Then I had a house viewing, so I had to leave my house. Well, I had to tidy everything up first, and then I had to leave the house for like 3 hours. So I wasn't really able to do anything. I actually took that opportunity to take my 4 dogs, my part of the pack that I take for walkies, to a private field in Surrey, and so I spent literally like 3.5 hours away from the house. Then we came back, then I had 2 hours to chill, and then I had another house viewing, so I had to leave the house again. So I wasn't really able to sit here and find trades. It was all a bit hectic, and I don't know what happened. I can have a look for you now in hindsight, hindsight capital in full force. But, sometimes reviews of what happened away from, the heat of the moment might be useful. So let's go back and see how that works. Now, to make this a little bit more efficient, I am going to utilize my Blatek backtest mode because we don't really have that feature on Topstep X yet. I'm sure it will exist at some point. But I have a nifty little thing that I like to do that we coded up for me specifically. But now obviously everybody else is using it too, because it's a part of all of our indicators almost, certainly the flagship ones. Where are we? So New York, New York, New York. New York Tuesday is what I'm looking for. Okay, here it is. So we still had some space. Actually, let me just change one thing. Let me change the ADR to be a little bit smoother and to go to 40 days to look for levels. All right, so London Tuesday still didn't quite make it past the low that was established on Monday. And we had a normal day, according to the day type. So I don't think I would have been in on this, but this test of the initial balance low and the... I mean, oh my God, this is so spiky still, and still only doing 100 ticks. This is horrible. So I wouldn't have traded this because the range wasn't big enough, but technically we did have a test of the initial balance low with a reversal, then yet again. Now at this point, this is lunchtime. When you see a potential failed auction for lunchtime, that's not a thing in crude oil. It's too late for that. Like you have to see, I went back like 5 years, and there was only like 3 days of a failed auction that happened after sort of like 4:30 my time, so after that Euro close. So therefore, if I see a failed auction for like anything after that, I'll be like, no, this is not it. So one thing I do see is that initial balance low again. That would have been from 6 p.m. And then you have to be careful into the close, because they usually do like a little rally into the close, and that's exactly what happened with this whip. However, here's the problem with low ranges. Look at the size of these wicks. This, whatever side you were on, this would have been extremely difficult to stay in on, okay? Extremely difficult to stay in on that. Because, you know, you're thinking, oh, I'm 30 ticks in profit, and then suddenly it just whips, and... and you're like, oh, I'm not in profit anymore. Great. It's a very uncomfortable thing because the sizes of 30-minute candles are still big, right? They're still big. So you can get a third of the average range that gets smashed through in just one single candle. That's not a good thing, okay? You need momentum to be relatively tame and to keep going. Like, for example, have 20 ticks for the first 30 minutes, then have maybe another 30 ticks for the next 30 minutes, and then have maybe a bigger move for like 60 ticks. But you cannot have, you know, one move for 30 ticks and then another one for 5 whipping into the previous candle. That's like a really, really painful market to trade. That's why I moved away from it, and I can see now that it's still doing the same thing. Now let's have a look at our bob just to see. I have a white chart on it because I traded more and it's just easier on my eyes. So let's see Tuesday, what happened there. All right, so our bob does like to turn around for lunchtime. That's actually a slight difference from crude oil. It is a slightly different product, and we did have an inside day open, which meant that this was a responsive sell opportunity after the Euro close. And it pretty much went to VWAP and, you know, wicked around there and kind of stayed there. That was pretty much it. Sort of followed crude oil, but this was a juicier trade for me because obviously you have a test of this conterminous line and then a decent move down across the next hour. That brings you about 92 ticks. So yeah, that was pretty nice. I usually try to run my trades up to the half hour before settlement, which is 7:30 p.m. my time. And as you can see, as soon as 7 o'clock came in, this is this wiki candle. they start whipping around, and that sometimes happens in the last sort of 2 minutes before settlement. So hopefully that helps. I think if I had traded RBOB, I would have been in on that fade into euro close, and then would have kept that through to the almost to settlement, but not quite. But that would have been a more sane trade to take for me. So yeah. Gigi the Monica says, it looks like DAX is planned for July 2025. Okay, so I've been looking at that post for 10 months now. They had it originally in July 2024. And then I was like, yeah, we're going to get it. And then they moved it to September the 1st. Then they moved it to September 31st. Then they moved it to November the 31st. Then they moved it to the end of the year. Then they moved it to February the 1st. And now they've moved it to July. So what does that tell you? It tells you that there isn't enough votes in order for them to put that in front queue for the development. So in order to get it to the front queue, we have to upvote that post quite significantly, okay? I know that these videos generally get about 2,000 views. If every person who is interested in trading DAX and watches the videos just goes and clicks that, that would be ideal. If you hear clicking, that's my deaf cavalier just walking behind me for no reason whatsoever. Just wandering around like a lost puppy. And no, he's not demented. He's actually doing pretty well still. He's just deaf. He can't hear squat. All right. Do we have any more questions? Let's see. How about the pattern gold has been doing every announcement? It runs up until the release of the info. Yeah, that is, that's something to consider. But again, I prefer to have a setup that I actually go into if I'm going to trade ahead of the release. I did that with DAX yesterday. I had a test of overnight VWAP long, which I entered, and then held it for a little while before I had to leave. It would have actually gone to like full 2R, but I had to leave the house. So again, couldn't watch it and had 4 dogs to wrangle. DAX, Wes says, DAX looks like it's going for a failed auction. Possibly, but we still have 7 minutes until that happens, okay? There is a 77% chance of this rotating back down through the initial balance. One slight issue there is that we are opening above value. We tested into the value and jumped away from it. So just be a little bit careful because the sentiment today is up. Therefore, we need a full 30-minute candle close to the opposite side before we deem that this is a failed auction. But we have some swing extremes. Let me get more coffee, get my mouth working. So yeah, what could happen on this chart with DAX is you have a fake out failed auction, still end up high, then wag around a little bit. The overnight VWAP, Wes, you know why I'm saying that. Overnight VWAP is pretty low, it's 457. So it's a very normal play in DAX to test VWAP and then to go higher. So really, if I was going to do a failed auction, I might front run it with a small size and then see whether we get weakness around VWAP and then run the rest of it on full size. So that would be my approach to it. But yeah, right now, we're just having a test of the initial balance. It's still above it, and until it actually closes back inside it quite significantly with no buying wicks, there is no failed auction today. Yet. Okay? But it is a high probability trade. If there is a reversal, sometimes it happens after 11 a.m. my time, which is 12 p.m. your time, Wes. Okay. What do you mean by failed auction? Okay, so again, I'm going to, for efficiency purposes, do this. So the blue line, blue extensions here, that's the extension of the initial balance. The red box is the initial balance. When we fail the auction, we try to go higher and we don't manage to make any new higher highs, and then the market goes back into the first hour of trading range, aka the initial balance, ergo failing the auction. So the auction attempt upside, they couldn't find any business there. They couldn't. Like, imagine if you're in the pit and they go, hey, do you like it at 495? And they're like, no. Do you want to take it at 480? No. And then you get somebody who's like, actually, I'll sell it at 490. And then what happens? Suddenly you have a whole bunch of interest to take the price back the other way. Ergo, failing the auction, right? The auction has failed. Nobody around you is interested in taking it higher. You tried. Do you want it? Do you want it? No. But I'll sell it. Okay, you have to put it in that kind of perspective to understand how things used to be. And this is just an electronic, effectively an electronic version of the same thing. It's the auction process. So yeah, we don't have people going, do you want it? Do you want it? But we have, prices, right? So are we making higher highs? Are we sustaining above the initial balance? Are we going into a further sustained auction? Or are we building structure? Are we spending time in the same area? And then ultimately not finding any business and falling back into the first hour trading range, exactly where we came from. And when that happens, you are expecting a full rotation. Now, obviously, DAX is an equity index, so it has a strong upward bias. And because of that, we might take the opportunity to go long, even if you see a flimsy failed auction, right? So you get to VWAP and then it starts to mess around with it. It's very likely that DAX will jump away from it. However, if you don't have VWAP, and let's say VWAP is by chance on that day located all the way below the initial balance, then you can have a full rotation through after the failed auction appears. And failed auction can be long, it can be short as well. However, like I said, I'm always a little bit careful with equity indices and the short failed auctions because of what they are. Okay, we have somebody who's asking a million questions and all the same question, best time to trade energy. We covered that during the regular trading hours. So London generally does sometimes trend in the energy markets, but I like to trade crude oil for the regular trading hours, or RBOB, or natural gas, right? So all of those are energy products. All right, let's have a look at more questions. Is the time for initial balance, oh, great question, Vagabond Trader. Is the time for initial balance for COMEX the same as indices? No, it is an hour earlier. So COMEX actually used to open at 7:20 Chicago time, which over on this side of the world is 1:20 p.m. However, because of the electronic trading at the time, didn't really have an option to open the position or any algorithms. They were kind of working on half-hour periods. Now you can kind of consolidate 1 minute candles into like whatever you want. So, when you write code, you literally take 1 minute data and then you can bump it into whatever box you want to put it in. It can be 7 minutes, like really odd time frames. It can be standard 15, 10, 20, 30. But back in the day, you couldn't do the consolidation of the 1 minute data time series. And that meant that all indicators, once the electronic trading became super popular, were starting the COMEX session at 1:30 p.m. over in GMT. I'm just going to let the Cavalier out because he's scratching and annoying me. Right. So because of that, an unofficial start time of COMEX is now 1:30 p.m. That is, it used to be 120, now it's 130, and then the initial balance we calculate from 1:30 up to 2:30 p.m. And then at 2:30 you have the equities open. This is why you see very big initial balances sometimes when we have the pre-market release, but actually for gold that's not pre-market at all. All right, we're starting to get a little bit more commitment here. Like it's definitely distributing on a 2-minute chart on gold. We just need a nice drop Rooney here to actually get into a position. But you know, it's slowly getting there. Just you wait. This is probably not going to do anything until the overlap. It's like because what generally London does, they like to reverse things. Now today is a bit of an outlier day. I don't know whether we've had some news. I haven't looked too deeply into the fundamentals today. And then obviously there's the expectation of the CPI, right? So that's going to be a big one. And if I do have a short position into it, I'm not going to have a short position into it. I'm going to exit wherever it is, probably about 15 minutes before, maybe even half an hour before the release, especially if I'm in some profit. But yeah, because of the release, I'm not itching to trade any full sizes today, so I'm going to stay on maybe maximum 3 micros just to protect yesterday's profits. Because I did end up the day, I think it was like $530 up, so it was pretty standard, you know. Let's have a look at more questions. World King one top. What time frame are you trading gold? So I'm a little bit different from most people where I don't marry any particular time frame. However, for major decisions of whether I should stay in a trade, I do use a 30-minute chart. I do look at other charts, obviously. So I look at the daily, I look at the 2-minute chart, I look at the 15-minute chart, and then I like to call them OODA loop. I know that Anne-Marie calls them OODA loops, which is a more fun way of saying it. And part of my OODA loop is to cycle through time frames, looking at price patterns. So I will look at the 2-minute, then I will look at the 5-minute, then I will look at the 15, then I will look at the 13. Not in this quick sequence, obviously, but you know, I might be looking at the 30-minute chart for the candle to start turning black, to start going into the red. And then once that happens, I might drop down to a 2-minute chart. And then once we come to the end of the 15-minute time frame, I will look at the 15-minute again to see what that looks like. That to me, maybe I'm unique in that way, but that to me provides a lot more information about the sentiment that is going on at the moment than just staring at one singular time frame and taking cues from there. I do like to front run some of my positions, and sometimes I will be wrong. This is why I like to cut some of the trades that I did front run early, and this will usually be the case with failed auctions. If I'm suspecting there's a very good level for a failed auction, I might try a trade ahead of time, right, before we get the full failed auction, in order to maybe get a better trade location. Now, there's a danger with that we're wrong, and that, you know, like in case of DAX, that we just test a little bit and then still go into that higher movement and go against it. Now, if you're doing the front running of trades, we cannot do that on full size. So if your full size is, let's say, 3 lots, you can't just go in with 3 lots. Because imagine trading minis, and then, you know, I use 35 ticks. If I'm wrong on something, that's going to be like that is really what's going on. I like to usually start those kind of front run trades on disaster stop, but then I also try not to enter positions that have gone too far into profit on the first smaller position, because it will screw up your average price, and then it will also screw up the stop loss placement, and then you have to mess around with the stop loss placement. So I have points where I will scale into a trade, but then if it goes too far out, I just take whatever I have at the moment and I run with it. I don't continue on to keep trying to get into a trade at an unfavorable price, go increasing both my risk and getting a worse average price. What I see people doing a lot is that they enter a trade on full position, then they do 100% increase to that position, and then they're like, oh, why did I lose my XFA in 2 days? Well, let's apply some common sense to it, shall we? What time is initial balance for DAX? London session only has one initial balance. There are no like different open times, so it's 8 a.m. till 9 a.m. GMT. And that goes for all of the products, right? We open pretty early over here. Did I answer this one? Do you think candlestick pattern works well on gold and oil? I want to use them in my strategy. Candlestick patterns are just a means of an entry, okay? Levels are more important, and the overall situational awareness of the day type we have. You cannot just use an isolated candlestick pattern willy-nilly and expect that that's going to work, because let's say you get a bearish engulfing in the middle of nowhere. That bears no significance to anything. It's just an ebb and flow of the market. But if I get a bearish engulfing from a call resistance area, or let's say that we've come up from the value, like let's say we open with a gap, and then it goes up to previous day value, and then creates a bearish engulfing at value low, that's significant. Anything in between is going to be complete nonsense. So when you're working with price patterns, they are useful, but just be careful where you apply them. The level comes first. Pattern as a reactive behavior of price action around that level is your sign how the market participants are perceiving that level. That is the only thing that it does. It is not a magic wand where you're like, oh my God, I'm using price patterns now. I'm the wizard. Doesn't work that way. Okay. All right, answer that one, I think. Last time my shares have gone through a reverse split. I lost it. Can you please explain a little bit on this? Reverse split, I've only heard of like positive split. So what the hell were you trading that it went into a reverse split? It must have been like a penny stock or something, I don't know. Why would it go into a reverse split? It's weird. If you were trading penny stocks and that happened, I would probably I don't know. I don't get involved in companies that are not valid. And if that is what happened, if a penny stock, if the stock fell so far down that they had to do a reverse split. Yeah, that's not good, obviously, and that's always a risk with those sorts of products, right? Stocks that are penny stocks, there's usually a good reason why they're penny stocks. So reverse split, I've honestly never gone through that. I've gone through positive splits with various things, but yeah, I don't know what happens if you go through a reverse split. I mean, do they merge the shares that you had? But you say you lost them, so probably not. Yeah, I can't offer more. I've never been through that, so I wouldn't be able to offer any advice on why and how that happened. I can see the fundamental reasons of trading, frankly, shit stocks and then them having to do that. But in that case, is the company still even viable? Because that means if they've gone down so far, maybe they don't exist anymore. Maybe somebody bought them. And in that case, it's just run away. Just take the loss, live and learn, don't do it again. And it's just one of those things in life and in trading that you have to take it on the chin and go, okay, that wasn't good. What the hell happened? Yeah, so do maybe a bit more research and be very careful what you're getting involved in. If it was like some weird crypto coin, that's also a big red flag. You have to be very careful with crypto. It's so unregulated. Anyone can do a rug pull, whole bunch of things that are weird are happening, and so just be careful. Anderson Equity says, what is RBOB? RBOB is R Robert. No, just joking. It's gasoline futures. We call it RBOB because that is what the product is called. And if you want to know what it stands for, so gasoline futures, the symbol is RB, really. So it stands for reformulated blend stock for oxygenate blending. It's such a catchy name. But yeah, it's gasoline futures, and basically it's like a special blend that they do, and it's lovingly called RBOB. So yeah, but it is RB on all of these products. So if you have crude oil, you will have gasoline on your data feed as well. So there it is, RBOB gasoline. Yeah, so, oops, didn't mean to do that. But yeah, it is kind of like a more liquid, old-style crude oil, the way crude oil used to be in the past. It offers 400 to 500 ticks per day. And yeah, it's one of those interesting products that I've actually been trading for probably the last 5-6 months, and I love it. It's literally like crude oil used to be. So yeah, bring it on. How do I know what charts correlate with each other? Well, you can use your eyes. That's the first step. You can see, for example, let's have a look at silver. Let's do a daily chart. And let's see what silver looks like. Let's delete some stuff here because this is very old levels. And let's get rid of platinum for a minute. So, daily chart of silver. No, that went back to platinum. Okay, that's a bit weird. Didn't save it. Okay. How much do silver and gold correlate with each other? Let's look at the candles. Up candle for today, up candle for previous day, bearish engulfing on silver, bearish engulfing on gold, then bit of a wicky bull candle, bit of a wicky bull candle. However, they do correlate, but this is not a correlation by a factor of 1, right? Because there's differences. This one is clearly trending all the way up to its overhead supply. Silver is weaker. It didn't even get to the supply. It's in the middle of the range. So they are correlated products, but not by a factor of 1. I would say they probably have about 60% correlation. And that's the first step. You can go a step further. I think Hogue shared some matrix of correlating products that you can have a look. I don't have it at hand at the moment. But yeah, you can find different kind of correlation matrices that might be able to give you a better overview. We have ES and NQ that correlate pretty frequently, not every day, but usually outside of the earnings season, they will go in a very similar direction, but with very, very different liquidity. Because obviously NASDAQ is much crazier than ES, and it's a very thin market compared to the S&Ps. But yeah, this would be the first step. Just use your eyes. Do they correlate? And in fact, let's have a look at ES and NQ on the daily chart. So how much do they correlate? Pretty decently, right? But today there's a bit of a divergence, probably because we're expecting CPI. So people have different sort of experiences and different expectations maybe as well for the CPI. But it's still pretty similar, right? So we have bearish engulfing here, bearish engulfing here. Doji candle, small bear candle. Another small candle, another small candle. Big bear candle, big bear candle. And then in the last 3 days, we have diverged a little bit with the S&P looking a bit stronger, but it's the same, right? We have the low, the low, the low. We have the low. ES didn't make that low, but then it made one today, like 3 days ago. So yeah, they correlate pretty pretty nicely, but still not a factor of one. I would say that this is probably a correlation of about 70 to 80%, right? You will rarely find things that are completely the same because obviously it's different players, different markets. But yeah, just using your eyes is step one. And then intraday, you can also see how they behave on, let's say, a 15-minute chart. How similar are they? Does it look the same or does it look markedly different? I mean, this is almost like a carbon copy of each other today, for now. Even though on the daily chart there is a difference, right? But on a 15-minute chart, I mean, look at that. It's pretty similar, yeah? So yeah. But yeah, if you are looking for more kind of correlation things across the board, then you will have to find some sort of a correlation matrix. Did I answered that one. Trader X says, would you recommend limit orders or market orders? That will depend on your style. I am a market order person. So when I was a swing trader, and still if we have like some swing trades in our other account, we will utilize limit orders as an entry. But for the most part, I prefer greater control over what I'm doing, right? So if I'm looking for an entry and I'm looking for a particular reaction around a particular level, I'm not going to be using limit orders for that because I rely on market generated information to give me information. And that's the reason why I moved away completely from limit orders. The only time I might use a limit order is, let's say, I am looking at a bearish engulfing and I want to get a test of the newly formed supply, for example, as an entry in order to enter into a position better. But even then, I will probably just wait for it to come to that point and then drop down to a very low time frame or look at bookmap to see whether the bid and ask bubbles are changing. And then I will go into a market order anyway. So yeah, for me, I wouldn't advise pros and cons against it. It's just what you gel with better. I prefer market orders for entries and obviously limit orders for any sort of targets. Aside from that, just give it a go. Try it. If you like limit orders better, use limit orders. If you like market orders better, use market orders. It's a personal preference at the end of the day. Catalin Costin says, how do you choose what to trade? Well, I have, I wouldn't say that I kind of scan the market like a lunatic and just go, today I'm going to be trading grains. So I kind of stick to, I suppose, 3 asset classes. So we have energies, precious metals, and sometimes equities. Obviously, DAX is one of my main things, but we don't have it on Topstep. But when it comes to the New York session, I don't really trade ES and NQ all that much. I might pop in a trade a couple of times a month if I see something interesting at the end of the day, usually. But it wouldn't be like, let's see what's going on in ES today. I do use the levels from the options data converted for DAX, which is a different activity. And I have SPX on one of my screens just to see, how that's working, because it does have an effect across the board, including things like Nikkei as well, believe it or not. So some of the call walls and gamma walls in general work pretty well from SPX converted into Nikkei. But how do I decide day to day what to trade? First and foremost, I use those volatility indexes from CME, CBOE, to see what's moving and what's above some of the threshold of those VIX numbers that I want to see in general. So that would be step 1. Step 2 is whether we actually have volume and whether we are moving, whether there's a committed movement during London, or we're just kind of stuck in overnight VWAP and very flat. So that's number 2. Today we have CPI, so all of this stuff that we're seeing now, this would be unwinding of positions ahead of CPI, which is why I'm not really itching to get involved in that. But yeah, so I would be looking for things that move, obviously, but it's not like I'm looking at grains one day, lean hogs the next and stuff. I have probably about maybe 7 things that I'm looking at, with 3 focusing for the week. So let's say this week I'm looking at RBOB, I'm looking at platinum, and I'm looking at gold. That's my focus for this week. That might change if I notice that either of those dies out and it's not moving. I will then look for an alternative. But yeah, the volatility indexes are the first step to that process. And then where we are in relation to VWAP and volume, that would be the next step. I wouldn't suggest beginners to jump around products like this. Remember, I have been trading for 18 years and I have a very systematic way of looking at things. And you can see I'm very selective. Like, I haven't found a trade in gold yet. It's going up, but to me that just means more risk. So this doesn't mean, oh yeah, let's jump in on a trend. I need a pullback somewhere, initial balance, VWAP, anything. Otherwise, we're in danger of these supplies smashing this thing down in a blink of an eye. Do I want that? No. But if it does happen, I want to be in on that. I don't want to be long at the supply. And yes, sometimes we can go through the supply. Of course, anything can happen. However, for me, going into overhead daily supplies like this, it usually doesn't end well. and seeing how people are in my coaching, it doesn't end well for them either, because sometimes they try and fish it up to certain levels and then they have slightly more ambitious targets than intended, and then the supply guys that sold previously, they come back in and they're like, yeah, we are still going to sell it at 27.20. So yeah, whilst you're honing your skills, don't jump around different products. Find like maybe a couple that you like, preferably from different asset classes, and just focus on honing your skills on the 1 or 2 products. Don't dilute your focus by trading 5, 6 things. You see most of us who have been doing this for a while, we have the experience to jump around. I know what I'm looking for, and I've traded most of these products for long enough. And if I don't, I do spend a number of days back testing it first and foremost across a 5-year period. And then I look at how it behaved in the last 6 months. And then I spend 3 months on a combine just to learn how it moves. And sometimes markets change. We had crude oil that had a 400 tick average, like just a mere 4 years ago. And then last year it fell down to 100. That's not the same market. So be very careful, jumping around. Learn 1 or 2 products to their core before deciding to move to the next product. Damas TV say, do you use Forex Factory? I haven't used Forex Factory since 2017, probably. So no, I do not. All right, this is going to be the final question. Do you often use dollar strength correlation in gold decisions? I don't use the dollar strength correlation at all in my gold decisions. There you go. I simply take in, gold does have a correlation with the dollar, but not always. Sometimes the moves that you see will just be the demand in or supply changes in gold itself. Gold is somewhat of a safe haven still to this day, although that title was very much challenged during the COVID times, because there used to be this old portfolio theory that gold is like something that you will invest in at times of great uncertainty. And then we had the semi-apocalypse known as the COVID outbreaks. And then gold went down with equities. And everyone who subscribed to that theory, they were like, well, what's going on? The economy is like going down the pan and gold is tanking. Like, what? No? What? So that was a bit confusing for everybody involved. However, I saw the disparity between those ideas already like 2 years before that happened. So I was already kind of doubting whether the introduction of Bitcoin has put a wrench in the works on the gold safe haven status. Or, I don't know, something happened. We have the new asset classes now that have changed the traditional relationships of gold as a safe haven, and therefore its relationship on certain days with dollar as well, with the dollar strength or weakness. It's not always, equivalent. In fact, I've seen many days where dollar is like screaming and gold is just doing nothing. It's just like chilling. So there is a correlation, but those traditional correlations are definitely being challenged these days. All right, guys, I'm going to finish it up here because I've got some other things to do. Unfortunately, I still don't have an entry into this gold. I'm going to keep watching it. However, if we get anywhere near the CPI, there's not going to be any trades for me. Today, maybe very late today. But I don't know, it depends on how it all looks after the CPI. I may not even trade today. I don't know, we'll see. You don't have to trade every day. That's not what it's all about. If there's no good opportunities or you can't limit risk, you can't find a way to limit risk, it's okay to skip a day. It's not a big deal. Markets are going to be here. They were here long before any of us were here, and they will remain to be here long after all of us are gone as well. I can assure you of that. I don't know what SF is saying. How about gold and safe haven? I just said that. Up on the markets, down? Are you talking about risk on and risk off? If yes, again, risk on and risk off sentiments are very particular sentiments. And they usually happen because of geopolitical risks like wars, some sort of big political problems. It's not something that you can expect as an everyday relationship in the markets. That's it for real now. Make sure to like and subscribe. Obviously, I'm going to drop some links here. If you're a member of a 5K club and you are in the US, you can get your 5K club badge and hat as well, but only if you're in the US. Unfortunately, they're not sending them out to those of us who are elsewhere in the world for the time being. Our Discord has grown to 100,000 people. Can you believe that? If you are looking for trading buddies, coaches, questions, help, just somebody to chat to, check out our Discord. It's in the chat there. And finally, if you are looking to come and trade with us, we have a casting call for you. Whether you're on the big board or still jabbing away in your trading combine, come and mix it up with us on the live broadcast. Put your name in the ring by filling out the form that I'm putting in the chat right now. That's it for today, guys. Thank you so much for joining me. It's been a pleasure. Amazing questions. You guys have definitely kicked things up in January. I can see the uptick in questions, definitely. So let's keep that up. That's what we want. We want people who are effectively interested in learning and developing and asking questions and taking action in their own trading, right? So if you don't take action, whatever you listen over here, it's not going to be that relevant. Thank you so much again. This has been the London session on TopstepTV. I'm Marcus Dee, aka Deeyana Angelo, and I will see you again tomorrow for this week's final edition of the London session. Catch you then. Take care.